terms, which is the midpoint of our guided range. On a year-to-date basis, we grew 4.3% in constant currency. In financial services, we saw a slowdown in growth due to the continued softness in both the capital market segment as well as the European banking environment. We, however, remain confident that the banking sector will come back, and we have got a very good pipeline. And as deals close, we are optimistic of banking returning back to growth. We are very pleased with the performance of the consumer business unit, which grew 12.1% year on year in constant currency this quarter, and sustained the rhythm that we have built in terms of deal wins. ENU and communications continue to grow moderately. We see a recovery in manufacturing and are encouraged both by the order book as well as the pipeline. Health, as we usually see in Q3, saw a seasonal uptick due to open enrollment season in HPS, while Tech BU was impacted by the furloughs, which happened in the Q3. And we also are seeing slowness in the semiconductor industry. The overall demand environment has not changed. It has neither improved nor deteriorated from last quarter. And we see the same level of uncertainty due to macro geopolitical issues. So no major change in the demand environment from last quarter. We delivered a healthy operating margin of 18.4% in Q3 versus 18.1% last quarter. And this was primarily aided by the depreciation of the rupee and favorable movement of the crosses. Now let me provide you a quick update on our strategy. On business transformation in the past quarter, our customers across nearly every industry have chosen us for their digital transformation of the business. We see digital transformation no longer just about enabling new customer experience. It is fundamentally about changing the business model. And I'm pleased to share our wins, which show how our customers are turning to us as a trusted business transformation partner. Digital revenue grew at 22.8% year on year and is now about 40% of our overall revenues. For a UK-based utility, we will leverage our significant domain expertise and water utility specific digital solutions to enable the transformation and digitize their procurement and HR processes. Modernization continues to be a growth driver for us. Our endeavor to help enterprises through the business-first strategy and an industrialized approach is enabling our customers to drive business acceleration, customer experience, and connected insights. Our investments in Cloud Studio is continuing to pay off very well. We have accelerated the cloud journey of a number of our customers, and now we've migrated more than 39,000 workloads and 2,900 applications through the Cloud Studio. We have secured a multi-year engagement with a US county to enable them to migrate to the Oracle Cloud infrastructure from an current on-prem infrastructure landscape. Connected intelligence, which covers both data analytics as well as engineering, especially the engineering next set of offerings. We continue to strengthen the building blocks of this space. We concluded the acquisition of ITI that we had announced last quarter. The conclusion of the acquisition happened this quarter. The acquisition will help us build momentum in Industry 4.0 and IoT offerings and will enable us to have a new set of clients with a differentiated value proposition. A European manufacturer of automotive tires has awarded Wipro a multi-year contract in the area of IoT and Industry 4.0. Essentially digital manufacturing to roll out a flexible and scalable manufacturing execution system in all its plants across the globe. The fourth area of our strategy is trust, which is around cybersecurity, data privacy, and compliance offerings. Focusing on enhancing our cybersecurity offerings, we have created a dedicated OT and IoT security practice to address the changing threat landscape due to connected systems. We recently launched our 15th Cyber Defense Center in Melbourne, Australia. Wipro has won a strategic contract from a US-based financial services institution to design and implement a more effective risk and compliance management process, leveraging our compliance services using artificial intelligence and Wipro Homes. Rapid automation of homes continues, delivering significant service improvements in IT run services, testing as well as BPS. Our effort savings in fixed price projects improved from 16.5 in Q2 to 17.8 in Q3. A leading Australian confectionery company has awarded Wipro a multi-year contract to automate its claims processes and improve efficiency, leveraging the automation capabilities of Wipro Homes. We continue to drive localization, and now US has touched 70% local workforce for Wipro. We continue to hire in the campuses, deepen our employee engagement, and make significant investments in training and skill building. This is reflected in our attrition rates, which have improved to 15.7% for the trailing 12 months. In conclusion, we remain focused on deepening our relationship with our customers, taking our set of offerings to them, and ensuring that we continue to invest in capability building across the organization. Now I'll request Jatin to share the financials.
Good evening, ladies and gentlemen. Very happy to be speaking to you once again. Our revenue was quite good. It was at the midpoint of our guidance. Our guidance was 0.8 to 2.8. We came at 1.8%. Our operating margin expanded by 30 basis points to 18.4%. And as a result, our EPS grew 3.2% on a year-on-year basis. We had a very good cash collection rhythm during the course of the quarter. Our DSO improved, and if you see our operating cash flow, they were 124% of our net income, and our free cash flow was 101% of our net income. Our effective tax rate was 20%. Our forex realization further improved to 72.09 for $1 compared to 71.56, which was Q2. Overall, we are quite happy with the kind of execution we are able to demonstrate in the course of Q3. Our guidance for Q4 is 0 to 2% sequential in constant currency. We'll be happy to take your questions from here.
Hi, everyone. This is Rahul from ET Now. Abid, first question to you. Seasonally, the quarter is supposed to be a stronger one for Wipro, while analysts were, of course, penciling in. What really went behind this guidance? Of course, you've spoken about the slowdown in BFSI. You're saying things will improve. You've also hinted at geopolitical development, something that you had attributed in the last quarter too. Beyond these, really, are there any other client-specific issues? And I'll come to Bhanu after this to understand the movement in top clients. But would you call out factors that are really impacting your optimism for the next quarter? Because your larger peer clearly says that the demand environment looks good, the deal closures are looking good. What's really the worry for Wipro?
There's no worry for next quarter. As you know, guidance for the quarter is a range based on what we see, and we bake in the uncertainties that are there. Typically in Q4, what happens is that some renewals and deals happen by end of Q3. Some happen earlier in the early part of Q4. So the range just bakes into that set of uncertainties that are there. Otherwise, we don't see any customer-specific issues apart from the macro issues that I talked about.
No customer-specific, no company-specific issues? Nothing that you see now. All right. Bhanu, you know, the top client, something that we had asked you earlier also, we're seeing that downturn really. Could you throw some more light what's really happening? Apart from the top customer, even the top 5, what's really causing this churn at the top level?
So, Rahul, if you look at the top 100 customer bracket for us, it has actually increased this quarter. What you're seeing, the reduction that you see there is primarily because of the points that we already mentioned to you, parts of BFSI, and and we also feel that if you look at our top 10 and top 15, if you see the top 15, that is still growing for us. So it's a same factors that we described to you about BFSI.
You
A large
attribute it to
portion,
be. Jatin, I'll let the others grill you on margins. Abid, one last question, and Saurabh can come in on this. A lot of speculation, of course, the SEBI rules really mandate that come April 1st, Rishad Premji may not really continue in the executive role. Has anything really been discussed at the board? Would you go beyond the statement that the company is giving us that we will comply with the rules as and when they really come into effect?
So first of all, there is no discussion at the board. As we'll stay complied to the law of the land. And as of yesterday, the SEBI has extended that ruling for another 2 years. There is no change. Everything remains the way it is.
All right, thank you.
Hi, Mugdha from CNBC. Jatin, my first question is if you can just break down, what is the organic growth in the revenue and how much came from the ITI deal? And generally as well, Abid, BFSI and communications seem pretty muted. When do you see revival, in these areas? And, lastly as well, what is the deal pipeline looking like right now? Rahul also has the same question, but given that it's also election year in the US and macro, political situations, how are you looking at the deal pipeline?
Yeah, so we had of our 1.8% sequential, approximately 0.3 came from the acquisition of ITI.
As I said, on BFSI, I feel quite optimistic. We've participated in the last 2-3 years, as you know, in a lot of the digital transformation engagements. What happens in Q3, as you know, a large percentage of our top 10 clients, including our top couple of clients, are BFSI customers. There is a lot of BFSI customers declare furloughs in the last 2 weeks of Q3. And also because digital by nature is discretionary spend. And a lot of the digital projects happen in agile sprints. The SOWs get renewed sometimes even every month or every few weeks because of that. That is why we bake in the uncertainty of whether some of those renewals will happen. Sometimes we saw that because Q3 is the last quarter for many of the banks, that is the fourth quarter of the calendar year. If they run short of budgets, there is a pause in some of those digital spending, and that comes back in the new year. So I feel quite good about our digital business, especially in banking and our deal pipeline. Across the board, but primarily in banking, we have a number of large transformation deals for new revenue. We have some of the deals which will get renewed. So I do see an uptick coming in. On communications as a vertical always has a level of volatility. And what you see in the numbers here also includes India. We have a very large share of the communications business for the India market. And that has been under severe pressure, as we all know, because of which you see some numbers. Our global communication business is doing moderately well.
Hi, sir. This is Devashish from Business Standard. I have a couple of questions. Just want to understand year-to-date CC growth. CC term, the growth is 4.8%. Just want to understand, you have given an outlook of 0 to 2%. In that sense, if we back up the envelope calculation, we can put the FY20 numbers quite kind of flattish as compared to FY19. But we all hoped that it will be better. So what's actually has not transformed or is not going to change for you? Secondly, but YOY, there are $400 million client that has been added. So is there any real focus on the, is there any separate deal team, large deal team, or after Rishad Premji becomes chairman, is there any change in the focus or approach?
So we've always had a team which focuses when there is a large deal. It does require a special focus, and that team has been there for a long time. We continuously keep looking at what are the things which are coming in the large deal pipeline in terms of digital transformation and some of the other activities how they get priced in terms of element-based pricing or outcome-based pricing, and we keep reinforcing the team. So we are very focused on winning large deals. As you know, last quarter we had announced a very large deal from ICICI Bank. Last year, around the same time, we had announced the Allied deal. So we win a fair share of our large deals. The year-on-year calculation for next quarter, that is Q4, also has the base effect of the Allied deal which came in Q4. Majority of the revenues came in Q4 of last year. So that is why the year-on-year looks a little suppressed.
Hi, Ayan Pramanik from Economic Times. Couple of questions here. I think if you see the ICICI Bank subsidiary deal, where I think it's been a rebadging deal, Saurabh, if you can answer this. Net addition has been 5,865. So how many people came from the ICICI Bank subsidiary?
3,800.
3,800 people. And for Vanu, I think I can see on $75 million client, there is decline of one client. Is it again a BFSI client, or any particular reason for that, or the deal got closed?
So these bucket movements do happen. All I wanted to mention to you is that we see an increase in the $100 million bucket for us, right? So there's a little bit of movement in the buckets that will happen based upon individual quarterly numbers that come in as well for the accounts.
And overall, how much percentage of growth came from these ITI and ICICI Bank, if you can say that?
ITI was 0.3% of the growth, and we have not broken down ICICI because it's a business as usual. And also, I would like to say, I think I can take credit that $75 million customer has become a $100 million customer because it moved up. So it's a good place to be in. Yeah.
Okay. Yeah.
Hi, it's Joshelle from ET. So I have one question. Localization in the US is 70% right now. Is there a 100% target? How are you looking at that number, especially when it comes to managing things like subcontractors and these things? Do subcontractors factor into that localization number? How do we look at it?
So first of all, as our journey on localization has been going on for the last 3 years plus. It was a very planned, and we had earlier said that we would want to be a 50 plus, and post that, it is our endeavor to just do what is right. We are not running after a number. We are not running after a metric to say that this percentage has to happen. We continue to hire locally. We have built a campus hiring plan in the US. We continue to hire locally. We continue to hire laterally for wherever required. And we are also now looking at a lot of people who are coming off students on OTP and training them. So very clearly, the focus has shifted there. But for certain skills, for certain things, we also have sending people from here, as you are aware. So it's a very combination of that. We are not driving a number, but we are comfortable with what it is. And we are seeing that if we do the right thing, it is growing. It's gradually growing up for us. That's the way it is.
This is Swati from Money Control. So again, about the campus hire, could you give color on how much campus hires were there this year?
So we don't, let me give you, so we don't look at call out numbers, but I can, as I called out, our campus hiring in India in this fiscal has been double of what we had done last fiscal. So very clearly the focus is to, induct freshers, train them, and make them ready for digital skills as we look at growth. That's the way we're looking at it.
And I also see that your utilization has been coming down. So is it because you're stepping up your hiring? Or?
Utilization is a function of three things which has impacted in this quarter. First of all, as I said, we have inducted nearly 12, large number of freshers. Second is, if you see, there's been a good story from an attrition, significant attrition drop, which means there are more people. And third, in this quarter, seasonality of furloughs. So these three put together as seeing a drop in utilization. I think we need to really work towards improving utilization because we have been at higher levels earlier.
Yeah, so your attrition has come down from 17 to 15. So is there any involuntary attrition figure you can share with me?
Involuntary attrition has been constant. Whatever we do, there's nothing.
Okay.
There's nothing which we are doing. There's drive or anything. It works out. And in fact, in these quarters now, post the performance cycle, it comes down. But if you look at annualized attrition for this quarter, we are at 12.5. I think it's a new low for us over the last decade. But I think it's a function of Q3 being traditionally a quarter where less hiring happens, a lot of shutdowns, and Q4 for a lot of things, and also some work which we have been doing over the past 2 years. So I think it's a combination of that.
Okay. And just one more question regarding the technology. So I think Mr. Abhirajam, he mentioned about why the technology sector, that particular has seen a negative growth. Could you throw more light on that sector as a whole?
So, number one, of course, in the tech business, the furlough is the highest because a lot of the technologies companies have a complete plant shutdown and maintenance in this period. Also, we are seeing softness in the semiconductor segment of our technology business. And the third is some of the technology companies that are part of our technology BU are also the 5G equipment manufacturers. And we've seen a little bit of pause in the investments that they were making, which should come back. So I don't see that as a long-term trend, but in the medium term, some of those 5G manufacturers, because of a lack of uptick in the communication service providers, there has been some slowdown.
Are there any more questions?
Mr. Neemanchwala, can you please tell me why the profits have fell down in Q3 and sequentially also?
Yeah, let me take it. So if you see our operating margin has actually expanded, but we completed a large buyback in month of September. Resultant, our cash that we were holding came down and interest income has fallen quarter on quarter by a large quantum. That is resulted in a net profit dropping in spite of operating margin actually expanding. So it's really the other income or the interest income that we earn in our cash balances which has come down, which has impacted the net profit.
Thank you.
Any more questions? All right, thank you all for coming.